Good morning, everybody. It's Chris Robinson, Robinson Ag Marketing with today's pre-opening grain and livestock comments for Thursday. It is the last day of business for this week, guys. We're closed till uh, at today's close. We don't reopen up again until Sunday night because of the Juneteenth holiday. So place your engines, start your engines, place your bets. It's funny. Uh, we didn't get any confirmation, just rumors yesterday about Chinese interest, Chinese sales of corn and wheat. We did get confirmation of 13 million metric tons of split between old and new crop. So, and soybeans. We did get good retracements after the last, sell off. I'll say that. We did get good bounces. We got a 38% bounce in new crop beans, and we got a 38% bounce in July wheat. July wheat's hanging in there. It's only down 2.5 last night. Beans are just being beans. Every night you go to bed, you're going to have a 20-cent trading range between now and probably the end of the year. So get used to it. We did hit 11.52. We traded as low as 11.38. We're down 6 cents. You should not be trading beans unless you can take 4 or 5 cents of noise on every trade you do. That's just really what it is. You have to have a bigger long-term outlook for soybeans, the way those prices move. D's corn could not get above 450 last night, hit 449 and a half, settled at 446, down 2 3/4. Again, today is the last day of the week. Should see some position evening up. We know the funds are short corn now. We know the funds are short wheat, and they are still long beans. So that's kind of where we're sitting. Crude oil hit 74 overnight, 74 and change. We started the war, believe it or not, down around 66, 67. So we're almost back to where we were. And yes, remember, back at Christmas time, we were down at 55 bucks. So depending on your politics, that's either a good thing or a bad thing. I guess half the country's mad, half the country's happy. Imagine that. We did get a little bit of a correction yesterday in the stock market, but I'm going to say this before I wrap it up. You can't listen to people on television anymore or the radio anymore. They're absolutely bananas. A 1 or 2% move in the S&P is not a crash. Okay, um, a 1 or 2% move in the stock market, 500 points is meaningless now. Okay, I hate to tell you that. If we have a 10% correction in the stock market, it's going to be 5,200 points. If we have a 10% correction, it's going to be 11,000 points. So just brace yourself. Don't pay any attention to anybody who talks about 500-point moves anymore. It's totally meaningless. We did get a good recovery in cotton. I talked about that in the letter. We did go down to big key support, that 75.50 area. That was the 60% pullback of the entire year's rally. Remember, cotton started the year at 67. We peaked out at 89. It was a great rally, multi-month rally there. I was screaming and yelling the whole way up, not because I knew we were going to correct, because I knew that sooner or later we would. And hopefully you were able to make some cash sales. At the end of the day, guys always say, well, you just want to trade, trade, trade. No, I don't. I want you to make good cash sales. If we can make good cash sales and never hedge, that would be great for me. Trust me. The hedges are there to try and capture revenue before the sell off and before you're ready to make a sale. That's it. And you have to move the hedges up for them to really work. So there's two parts to hedging. And the third part is, do you re-own stuff after we've had big sell-offs? We had a 92-cent sell-off in soybeans. We had a $1.15 sell-off in wheat. We had an 80-cent rally, an 80-cent break in old crop corn and a 75-cent break in new crop corn. Is that something that you want to re-own? It's totally up to you. You re-own the bushels that you sold. Moving over to the livestock, fat cattle, feeder cattle, right up near key old highs, old contract highs. Are we going to get there? I don't know. We do have a cattle on feed later on today. That market has been extremely resilient. Feeder cattle have rallied 30 bucks since the 35 bucks since the New World Screwworm headline hit on June 4th. Also on June 4th, since then we've had about a $14 rally in fat cattle. Is that overdone? We will see. Is anybody going to take protection in front of this cattle on feed report? Probably not. Is it already factored in? Possibly. But I guess that's the pitch. You know, if it's a curveball, we could get some action in cattle. And then lastly, lean hogs just absolutely fighting tooth and nail to find a bottom down here at 7 month lows. So, with that being said, let's see what happens today. Remember, today is the last day of the week. So, make sure you get everything hedged up. We won't open up again until Sunday night. Take care.